We're on the New Zealand Swiss on the 15, and this was a trade I actually got in last night, and it is a triangle, and there is something here where I am going to go against one of my rules, which is very, very unusual, but I'm going to talk through why. And trading is rules based and we must stick to it, but there are times when you must use your own judgment. In fact, a lot of trading, while it's rules based, there's going to be judgment involved. So you may have a rule, say for a double bottom, where we need to come down to major structure. We must have the RSI go, say, oversold at least 80, and we must have divergence there. We may need to see a hold. You may have to see a higher high, higher close candle. They're all rules based, but the judgment comes into what is defined as a good looking double bottom. Is it that we've got an equal number of candles on the first test compared to the right test? Is it that the major structure is defined as being tested 3 times and it can only be the closes of the body candles that hit structure, not the wicks? And all that comes down to experience and judgment, and this is one of those trades. So I'm going to go to the 60 first of all. Let's just remove the orders. In fact, no, let's do the higher time frame and then I can talk down from there. So we have been very, delete that. We've been very, very bearish here. The lows. Now we know that typically when there's a cluster like this, typically the lower level of structure gets tested, which is the very lows of the candles, which is here. So you can see there is room to come lower. We've got a nice resistance level, support level here, very nice area where we're looking at the market being drawn to. What concerns me is we do have the 6600 psychological number. Now I can't take these patterns at those numbers because they do act as support or resistance, but here's my judgment, is that we're only, how many pips away? We're only around 15 pips lower to the structure level to where we're trading at the moment to that psychological number. Now it's very conceivable that these structure levels that act as magnets could pull the market down to retest this level and spike down and then pull all the way back up to hold that 6600 psychological level. So that's certainly plausible. So let's go to the 240, and here on the 240 we've got a sore thumb move. We've got a swing here that you can see. We've got a very directional pole, and don't forget the market's been very directional. And then before we get to that major level of structure, we are holding this level, this 6600 psychological level. And this is the reason why I don't take breakout patterns at psychological numbers, but this one I have, and I'm going to talk through why. Along the top we have the market on the closes of the candles retesting. Get those arrows right, there we go. And this is a triangle because this test here did not test the closes of the candles, and we've held structure at the bottom. We've got the directional pole. So this for me is certainly a breakout pattern, but as I drop down the time frames we'll actually see more of the structure. Here it is on the 60, and what you should be noticing is double bottom, and if I go to the 15 you'll see a couple of these. So here we have a double bottom. The market went up, failed to go any higher, pulled lower. Once again here we double bottomed. The market tried to go up, failed and came lower. Now double bottoms are reversal patterns, so we do see a reversal from them, and we have seen a small reversal. But look, we've had a double bottom, pushed higher, couldn't get any higher, pulled back, another double bottom, we've held that level, pushed higher, couldn't go as high as the first test, pull back. So this right now, even with the double bottoms, we cannot push higher. The market is clearly coming lower. So I actually entered based on the 3-bar reversal on the 60. Well, it was actually a lower close. It was just here. I saw the market come down for a big lower close candle. So if I bring back on the orders, this is on the 60, so I can have my stop just an ATR above the high here. And I've actually used that then as the entry. Now, we have not as yet, if I move this up to the very low of our structure level, we have not as yet closed below it, but look what we've just done. We've just closed below this spike. We've had a big lower, lower, lower close candle. This may be the breakout, or we may come up for another test and then see the breakout. So we've talked about entry, stops and targets. Then I'm going to throw a fib on and look for that usual 127 fib, and we're going to make sure that there is room to come to targets. In fact, we know that there is because we had that lower level of structure. I'm just going to leave the 127 on there. And there we go. I'm actually front running this trade by 5 pips. I'm actually now going to make it 4. I left it 5 overnight just because of the increased spread. So in terms of risk then, 21. And this will be a nice reward to risk this because I got a good entry. We're looking at 47. Welcome back for the last part of the video, and I'm feeling a little bit silly, but I'm feeling very proud of myself at the same time. And the reason for that is this trade has lost. I actually lost for 15, not 21. I'll talk through that in a moment, but I want to explain how I broke my rules, and I suppose in a way try and rationalize why I've done that. Okay, so I went through quite thoroughly the rules for this pattern, and I said right at the beginning of this video that I'm going to break my rules, and at that point there should have been a great big red flag that went up and said, hang on a minute, not only are you going to break your rules, but you are consciously aware that you're going to do it, because I've just said I'm going to break my rules. And a little light bulb should have gone off in my head. Electric buzzer. I should have had my seat be electrified. I don't know. But saying those words, I am going to break my rules, is a big no-no. But yet I still went and did it. So why did I do that? Well, just before we get into that, okay, what we had here was the perfect setup. What is the perfect setup? It's the setup that met my rules. Anyway, apart from the psychological number, we had a great entry, we had the 3-bar reversal, the lower low, lower close, we had room for the market to come lower, we had a clear 2 touches on either side, and we had the market wedging or coiling at this end, which met my rules. The only thing that didn't was 6600. Now, I've tested these patterns time and time and time again. I know that when they occur at a psychological number, the win rate is substantially less. The reason that I believe that is because psychological numbers act as structure, and so when you look at it historically, we typically don't tend to break through psychological numbers, even though there's no structure there. And what's happened here is I was then taken out. If we go to the 15, I didn't actually see it, but we actually formed a double top, so I was able to get just 5 pips above the high here. So it reduced down my risk from 20 pips to 15, and I was taken out. Okay, so why did I break my rules? Well, I obviously said the words, but consciously, did I actually take on board that I was breaking my rules? The last 2 weeks for me of trading have been phenomenal, really, really, really good. And what tends to happen, I'm quite an emotional person, and I always struggle with my emotions when it comes to trading. I always have. They are better than what they were. I actually see a psychotherapist who's a specialist in dealing with emotions, and I've been seeing her every week now for 8 months, and that has really helped to understand my emotions and triggers that occur. So for instance, the trigger for me is over the last 2 weeks, I've done very well. I've had a great week this week already with trading, and I'm feeling a little bit pumped, a little bit excited, and those emotions have kicked in, and it kind of makes you feel a little bit invincible. And even though I said the words, I'm going to break my rules, it didn't click with me as it should have done, and I went ahead and broke them. Of course, it didn't help having a great setup. A great setup is everything that meets your rules apart from that psychological number. So Whenever I do anything like this, I think it's always best to share it with people, because I make mistakes. Those mistakes do get significantly less and less as time progresses. But yes, this was, I think, a little bit overzealous, overconfidence, having a great week, having a great 2 weeks, and then thinking, here we go again, here, this is another great setup, double top here to reduce, to put stops behind and room to go lower, and we got the entry, and well, great example of breaking your rules and why we should stick to those rules definitively, even if we're doing very well and we're earning lots of pips, or even if we're doing very poorly and losing lots of pips. We still have to maintain that balance where we can't get too excited and we can't get too down about things, because our emotions kick in. Identify, predict, decide and execute are the 4 methods we should use before entering the trade, and that allows us to not get emotional. But I got emotional in this trade. I let it get the better of me, and the market is relentless, and it punished me. Thankfully, this was only a 15 pip losing trade, though the amount doesn't matter. The fact that I broke the rules matter. But lesson learned: stick to the rules.